Alright, so just gonna trend review the YM 5 minute chart. Alright, so right here was definitely climactic. As you see, 17,800 contracts traded. But the real change is right here, where it's either covering or buying the lows or whatever. This is 1,300 contracts, 13, I don't know, a lot. Okay, 13.3. So that's more buying than all the up waves. So there's heavy buying. Then it pulls back on 17. But don't be fooled by this because it's not breaking the lows. But still, to say that, oh, this is bullish and all that, the down waves are still stronger than the up waves, right? So the down waves are still stronger than the up waves, and you want to just be a little careful going long. But buying has come in, and I guess, like, I can't really call this. I don't know what to call this, but it's definitely stronger. Okay, the only thing we know is that the time has decreased. It's only 3 bar wave and doesn't go any lower. It just stops, and this is like a kind of like a spring right there. So that just it's difficult to just shift your mind to being bullish because there's contradicting information. So you don't want to bullshit yourself and say, oh yeah, it's just bullish because of whatever reason, or say it's bearish. But all you know is that it's neither. And this is the moment where you have like the when in doubt, stay out, that type of feel. So you watch the highs and the lows to see if they break, and if they break, or how much volume. Because right now I can't determine whether to go long or short at this stage. All I do know is the relative strength of the down waves, the force of the down waves is still greater in terms of volume. And I guess to a lot of degree, time and price, etc. Over here, you have 58 buying, but notice, like, even though there's still strong selling bars, the bar right there is also a strong buying bar. It doesn't look as strong as a selling bar, but notice that it closes above the buying bar, and that's the most amount of force in the whole trend. So it may still not be enough. You just want to just register the data. Don't make the judgment. Just hold the information in your head. You just be aware of it, but don't just make a judgment right away. After that, it starts going sideways. Okay. Now, right now, you don't know much, but there is a tip off. See over here, it goes from 58, 50, 79, 120. Supply looks like it's still there, but here's the switch, 95 to 39. Okay, now you could still say it's contradicting data, but you can't say that the bears are totally in control because it's switching. It's like bear showing strength and bull showing strength, back and forth. But at this point here, where it goes white on the up leg and the down leg, where this is white, you see the up leg and the down leg, and 77. Okay, up and 19 below. that that is that right there is now giving you clarity, because nowhere do you find the ratio in all of this, which is almost 4 to 1. This is 4 to 1, buying and selling. So just okay. So now it's like there's a meter. You kind of like swaying more on the bullish side, and then after that you have like a very clear indication. You have this. I guess you could call it an imbalance, and then you have your excuse me. You have your breakout bar, which takes out the highs. See that? So that's the high of this wave, and the breakout bar closes above it. So all of this, you're like confused or in doubt. So just just sit back and let it show you. The tape. Oh man, hold on. All right, I'm back. All right, so over here, there is an imbalance, almost 4 to 1, and then the breakout on heavy. I don't want to say heavy volume, but if you look out on the follow through, when the wave complete, it is heavy. See over here, 77.19 109. That's it. Bulls took control. There's a breakout. There's follow through. Now time to buy the pullback. Unfortunately, when they have some what I call bullshit trends, it only had one wave higher. And this is the problem, because you don't really know how far it's going to go at this point, right? But I know that the cause and all this up down up down up down up down, I know it has a higher cause. I keep it in mind. you know Over here, there's the breakout, there's the test of the breakout, there's your strong rally. Now, even though there is a strong rally, it pulls back on 31 and 22 and then does this on 84. Now, this is strong, okay? But notice that this maneuver is not just, it is strong. It is strong. When they do this, you have to just, it's not evident right away, but this right here is, I would call it a shakeout. How do I know the shakeout? Because it just broke out and made that higher high, so I know that the longs are like very enthusiastic, and I know their stop is going to be right here, you know, under this pivot, right? That's the prior pivot, or the pivot before the rally. All the stops are going to be here, and this is the best place to target for a stop run. Absolutely the best. You got a rally, put it right below here, you're almost definitely going to get run. Because anytime it gives confirmation that's that clean, that's the area that's going to be tagged. They did the same thing last night. I'll show you right now. Um, where is it? Right here. Right here. Right there. You see how that perfectly goes to it goes like one or two ticks below the low, and then they do whatever they can do and move it up to here. All right, so stop placement is really critical. Anyway, so where was I? So now they, this right here is the shakeout. I there's some guy, he on the internet, he says something very important, and that is, like, before he takes a position, He looks to see if the area or whatever there's a shakeout or a stop run or a spring or something. That really, that is almost all the time is true. That they screw everyone over before the rally. Why? Because this is the quickest way to accumulate. The quickest way to accumulate is through a shakeout or stop run or spring. That is the quickest way to accumulate. The traditional accumulation looks like this, where you have a sideways range, right? But if the market's going to go up and strong hands, they don't want to wait for all of this time. They don't have time. They need the contracts. They need it fast. All right, so they're not gonna put it in a range for like a significant amount of time and then rally it. What they're gonna do is they're gonna have to force a spring, and it has to be on a close by pivot. Okay, because by doing that, they can quickly run the stops and force the accumulation into their hands. They're not gonna do a re-accumulation for a long, whatever period of time. What they're gonna do is they're gonna spring. They're gonna get that low. They're gonna get that low right here, and then they did some more accumulation. That's why you have these. This is a hinge, and you have to understand what was really going on here. After the shakeout, and you see why this is shakeout. It couldn't even close below this level. It just dipped 2, 3 ticks below that level, enough to run a stop, then move sideways and buy up everything at this level. Okay. After they bought up this right here, you can call forced accumulation on the spring, and then reaccumulation in the sideways 1, 2, 3, 4, 5 bars. This is reaccumulation here in the form of a hinge. So basically, that's what happened here, and then they rally it up, and you see the strength 149. Pull back on 50, rally on 12, pull back on 42, rally on 42, pull back on 9, and you're going to notice that making higher highs, higher lows, and it's not really correcting. And this is like the point where you have to, when it's up here, when it takes out the breakout, you have to really anticipate in multiple wave ups, high, 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 that there's going to be a correction. In this case, instead of a correction, they just climaxed. How do you know that this is a climax? There's multiple indications. First of all, if it keeps on rallying like this and then it does the biggest wave or one of the biggest wave at the top, you have to ask yourself, who's buying? Who's buying up here? Is it strong hands? Nope. Strong hands they are going to buy on the down wave. Okay? They buy on the down wave. In this case, this maneuver here, ding 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 ding, buying here. On the up wave, you have, what is it? You have public participants. And so, it kind of climaxed here, and this is very strong. Like this up wave is very strong because there's heavy buying. Now understand, if this was at the bottom of the trend, it would be bullish. But if it's at the top of a trend, it's not bullish. From the indicators and all that, you will see high price, big range, good volume, high volume, all the signs of strength. But from the location of it being on top of the trend instead of at the bottom of a trend, that will tell you who is causing this type of behavior, who is causing the strong buying. It's not strong hands, it's weak hands. But the technical indications will be exactly the same, meaning big volume, big range, big this, big that, whatever. So this is your climax, and after that, this is selling. This right here is selling. Now, there's one important thing that I wanted to quickly discuss, and that is in my yesterday's video I talked about the bar that breaks the back of the uptrend. in Wyckoff's study, he explained that when a trend breaks, right, very, very, I don't know. I mean, he mentioned it in the study, but I see it all the time. That in usually in the sign of weakness wave, in that wave you will have widespread, big range, and you're gonna have the bar that breaks the trend, the uptrend, the back of the uptrend. Folks, this is that bar right there. How do I know? Look at the look at this force. You see that? You see how big it is? It's the biggest in the from the shakeout. From the shakeout on, there is no, no little salmon colored bar. They're right here, but that's weak. And then all of a sudden, you have this. That is heavy force. Heavy force. And I believe that the uptrend is broken. Now I have to see the waves here and how strong they are to confirm. But these two are telling me there's that supply is present. These two are telling me that the force of the selling has increased, and this is very likely your sign of weakness. And the bottom indicator tells me the force of the wave of supply, not just the bar, that's the top indicator, but the wave, the force of the wave has increased. Look at this. More force on this wave than all the other waves. Okay, and now the force of the buying waves look weak also. So we'll see how this plays out, but I want to see if the buyers are able to buy it all back and take it higher, or if this bar right here blocks them. Meaning I'm expecting resistance in around that area to see if aggressive sellers continue to sell, or if the buyers absorb the selling and take it higher. So that's what I want to see, because they could have just gone out because end near latter part of the day, or it could be profit taking or whatever. So I want to see how this range plays out right here. I want to see how this range plays out here, and if the trend turns. That's all, folks. Bye bye.